Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is Friday, June 17th, 2022. We've seen some interesting changes the last few days since our last report. Some good, some not so good. All right, so let's see. Sell alert, Verizon. Sell 2/3, hold a third. That's our dividend play. Today is Friday the 17th. XLU, I would sell the second third. We really took a beating on this one. And if you're comfortable, sell all is not a bad situation on that. AVD, sell the last third today. And copper, sell the first and second thirds. You can hold a third on copper. We'll go over stock charting once we look at our position table. On our shorts, PSQ, we did get stopped out on our first third. Take the remainder amount, and you probably added on the bounce the other day. But with that said, of the whatever you have left, cut that in thirds. The first stop 14.35, second stop 14.16, and hold the third till our 10 crosses below our 15. SPY, the short of the SPY is SH, one third at 16.5, the second third 16.2, and they'll hold the last third for our inflection change. And DOG, which is the short of the Dow, the first third 36.4 and the 35.8, and the last third hold. And we'll go over that in our tables. A couple of market review. Of course, we knew the Fed was going to go up. It went up 0.75. I was surprised we didn't have a stronger relief rally with the news saying that the Fed is being more aggressive. It lasted the day, and then yesterday was a whoosh day, and it's we're back on the bear attack. Environmental factors, regards to the Twomey investment process. We look at the overall trend in the last 6 months. We look at the overall macroeconomics that go into it, and then we look at the environmental impacts, and those are kind of short term sometimes. And then we certainly put that into our sector tables analysis, and then we come up with our trading philosophy. But with that said, environmental, no solutions for energy. It's a risk trade. It's very volatile. If you have some, you've got to reduce risk. It's getting sold off. In my cases, I've taken 10 or 15% losses on all my positions. I'm probably going to sell all but a third today. Reason for that, I take it that the energy sector is starting to, the futures are on the trading sector. It's the futures are dropping, and that's because they feel that people are pulling in their horns, less travel, less demand. All that is coming across the board. We'll see where that shakes out. Like I say, you can wake up and energy can be down 10%. It could be up 10%. I mean, it's all over the place. In the last couple of days, it's been down quite a bit. So if you're in those, you got to get out. Consumer, they have limited expenditure. That is definitely growing every day. People are just running out of money due to this rapid inflation. U.S. credit card balances, it's up 71 billion more than the year over year for the first quarter 2022. So in other words, 2021 to 2022, the first quarters, compare those, and credit cards are up 71 billion. All right, so people are less flush with cash. Inflation's going up. They're getting hit at the grocery store and the pump. They're putting it on their credit card, hoping they can pay that down. That's going to be a disaster. I'm not saying for the people doing it. I mean, I'm just saying for the credit market, okay? We'll go more into that later. But overall, if credit card is going up, junk bonds are getting more expensive. Junk bonds are corporations, right? Mortgage applications are declining because the interest rates are climbing to buy a house. Housing is staying on the market more. I heard somebody on CNBC interviewed, and they said, realtor was saying, Mark, I've had something on the market 30 days. It would have sold back in April within a weekend for over asking. So there's you can go anywhere in the country and across the world, and you could pick good and bad stories on real estate. So I'm not going to more to come on that, and we'll just wait and see what happens. But certainly, lumber's down, demand's down, builders are down, everything, and everybody's pulling in their horns. The Fed moves have helped in reducing the demand a little bit. It'll affect inflation a little bit over time. It's going to probably need higher interest rates, but the overall liquidity is drying up because they're not buying up bonds. That's a bigger impact than what you're going to hear on the news. All right. If the Fed's not buying bonds, somebody else is going to buy. And therefore, yields or interest rates have to be risen to get those attractive. We're definitely seeing bear market tendencies. What do I mean by that? We're seeing shorter and smaller bounces, and then followed by just wholesale selling of any stocks. Yesterday was a good example. If there was a stock, it was sold. So lighten up if you're still holding some mutual funds or something like that. My buddy asked me the other day, he's held on to everything. He's down 30, 40%, some cases 50% in certain things. He said, what do I do now? I don't know. I mean, that's at that point, if unfortunately, he's not young. So, the horse is out of the barn on that. If you're young, it'll come back. But unless you got a place to put it somewhere, in a short-term trade that's going to make up, half of that. That's a tough one. I mean, that's what people are faced with now. And I think some people are just going to hold on for the ride. I don't know what to tell folks like that. Anyways, stock alerts, TBT, that's up 5.92%. Let's see if we can get a real-time look at that. Where are we on the daily chart? It's holding the 10 EMA. So what's going to happen there? We're going to, your first third is right at that or right below that. So at 27.4, 27.35. So that may get ticked off, but your first third is right below that. The second third is going to be at 27.13, and we're getting near our selling stage on that, but hopefully you retain some profits, right? Same for TBF. One's the 200 play and 2 times play, and one is just a standard 1-to-1, which is TBF. Copper, sell signal was hit several days ago. So the first third should have kicked off. Sell the rest today and just get out. PSQ, we're up. It should be down a little bit today, or is it? PSQ. Well, it's holding. So, here's the relative strength index for PSQ 65. So it's kind of in overbought territory. What's the QQQ? It's got to be nearing oversold. 33.98. Yeah, I mean, we should be seeing a bounce soon, So anyways, put your stops in. We already talked about those on our previous slides. Same for the dog is up 9%. Same thing. SPY is up 11.5%. Pull up your stops, the first third, second third, get out with some profits if we have a major change. These markets are going to be really volatile going forward, and short positions you can really get wiped out fast as well. Our small caps, the RWM. I did say if you're aggressive, trade the TWM. Stick with the RWM, the 1-to-1. We have got in a little bit late on that. It's 25.7 our entry price. I put a stop on everything. Put a stop on everything at 25.35 for now. Risk traders only, SJB. That's the junk bond for corporations. It's the inverse of that. So SJB is the shorting of it, saying that if these corporate bonds disintegrate and these companies, have a hard time paying that debt, SJB is going to skyrocket. Risk trade is we're in at 19.46. I added at 19.55 this morning. Your stop on everything here is 18.5 if you're in it. And SJB, the reason I'm saying that is because SJB, if we look at that, is it SJB or SBJ? I always mix it up. SJB, if you go back monthly, I only could go back here. I'll have to look on stock charts. But anyways, back 2011, it was up. We had a high of, that's coming out of that last recession, 2009, right? So anywhere from 39, 41, and we're down at 19. So, it could run if things take off, but we've had an amazing run off the 200, and we got in on this one too late, but we'll see where this shakes out. And what else do we have here? We have our others, CPG, that they did pay out a dividend. We got out at, I was at 42%. We did our first third, stopped out at 23%. Sell the second third today, and if your 10 EMA crosses below the 15, which it looks like it will today, get out of that last third. So if you want to sell both 2/3 today, most likely, and if you're probably stopped out at both, but I just looked at it earlier. Well, let's take a look at it. Because I think it's like 11 o'clock now, but almost 11 o'clock. CPG. So our second third out, and it's at an inflection point. You might as well sell everything today. Verizon sell signal already occurred a while ago. Sell 2/3, hold a third for our dividend play. We'll take a little bit of a loss on that. DBC 2/3 remain, second third, 2/3 remain. Put on the second third, place a stop at 29.35, and I'm sure that kicked off today. DBC. Yeah. 28.79. 28.79. What did I say? Okay, so we got stopped out of that second third as well. So we, 5% gain on that. The first third, we got 5.6% gain. Hey, pretty good. And then if that inflection point hits, we'll get out or we'll add, depending. XLU, this is not didn't turn out too well for us. First third stopped out at 8.47 on that whoosh, and then sell signal. The best bet is to sell the next third today and put a stop at 64.8 on the last third, and we're going to take a bath on this one. AVD 1/3 remains. Sell it all. Get out of that. We'll take our 5.4 and 6.7, 6.9% on the first and second third, and then we'll take a 6% loss today or so. And we'll get out of that. Bear markets, how long they last. I heard somebody from an economist for Princeton said inflation is going to drop as fast as it has risen because it's all based on supply chain. Well, maybe he's right. I don't know. But anyways, it's kind of the big part here of our issue with this bear market. Stocks are selling off because companies aren't performing, and they're not going to be selling as well as they had been in the past past 10 years. Average bear market lasts 11.4 months. This one, I think, I'm not in the prediction business, but I think, I'll go with the average on this one. Overall, you got to keep in mind that we've got employment that's up, right? Employment is up. So with employment up, that's a good thing. And I've said this before. I'll say it again. I didn't coin the phrase. I believe Reagan did, but what it said is, it's a recession when your neighbor's out of a job, and it's a depression when you're out of a job. And a recovery is when he was running for president. He said a recovery is when Carter's out of his job. Politics aside, but that's where that statement, I guess, came from. And I don't think he probably was coining it from somebody else, but he added the Carter part. But with that said, it's so true, right? So overall, is what's working. The last shoe to drop is layoffs. If companies just pull in their horns, we don't have major layoffs. People, even though it's painful, they'll cut out stuff and they'll be able to pay for some of this, inflation that's going on. Inflation is here for a while. I don't think it's going away for a while. Susie Osmond came out the other day, and she does all that home finance type stuff, and she said, plan on a very long inflationary period. So you got, one guy from Princeton say it's going to disappear quickly. The other one say, plenty of opinions out there. Until it changes, we're going to play our market the way we see it. And the good news, if energy keeps coming down, the future, all my energy is probably stopped out today. But with that, I got like 1/3. I'll hold some spectacular losses. The energy is very volatile. That's why we only played the CPG. I made some recommendations on if you wanted to get into the others, but you got to get out of them if you're in them. It will come back just as fast as it goes. But if that's the case and people aren't traveling and energy is going down, that's going to be a huge impact. And we can see the pump gasoline prices come down 20, 30, 40 cents a gallon. That's going to be huge help. And if employment doesn't tank and the manufacturing index stays above 50, it could be a soft landing. I don't know. But those are the last two shoes to drop, if you will. Everything else has dropped as far as indication of recessions. I read last night that, because I was trying to find it, that the GDP data will come out on June 29th. And a couple of people had said it looks like, based on things they track, it's going to be negative or zero. If it's negative, that's two, back to back. But we'll see. I'm not, those are all just numbers, unless a lot of times that's rearview mirror stuff. We all are feeling inflation and recessionary impact. It's going to continue for a while. Our advanced decline for the New York Stock Exchange, it's still going down, no doubt. The relative strength index at 34, oversold, yes. Somebody was saying on CNBC yesterday, a fund manager, that they were talking about 75% of New York Stock Exchange stocks are under their 200-day moving averages. We've talked about that in other segments. She replied, she said, yes, but the last financial recession, 2009, they were 100% below their 200-day average. So she says, does that mean we got 25% of the stock market to correct? So who knows? But careful times ahead. Sector analysis, we'll skip that for now. I'm going to get this stuff out so you can get your sells in. And if we do see bounces, we want to add to our shorts, unless it's, we should see a bounce. I don't, based on all these relative strength index, everything, all our shorts are nearing overbought. All the indices and even the stocks are hitting oversold. I had some stuff that I was looking at that would, in the 30 area for relative strength index, and they're still dropping. So who knows? Just play it tight, and we'll update as soon as we can on some new developments. Right now, I'm just sticking with the short on the indices and TBT, TBF. Everything else I'm pretty much lightening up wherever I can. I'm James Twomey. This is the Stock Report for Friday, 6/17/2022. Have a great day.